Welcome to India Market Open. It's Tuesday morning and the setup looks so much better this morning than it has over the last few days. Very smartful recovery on the street yesterday. 22,000 has been held in how? In fact, 22,100 got taken out and we pretty much closed at the day's high points. If you were a trader on the short alongside, I guess you would have made a little bit of money. Yeah, or made no money because these are difficult markets to trade, right?
Maybe some people just left off because VIX is still higher and that's a bugbear. But frankly, in some sense, right, the possibilities of this happening because the FI selling getting over, Amit Shah, Narendra Modi coming out and reiterating the strength.
I mean, those are strong statements. Go out and buy the market because post 4th of June, it's going to go northward.
Remember, he knows markets better than most people.
Most of us, right?
I mean, just to be tempered with the fact that as a politician in election season, you have to
say those things.
It's much more like management after their results, no matter what the numbers.
It's looking good.
But
unless you're Tata Motors.
But having said that, it is a cue that the market definitely took and moved on with.
You can argue that, or you can also argue as a devil's advocate that if we went out on a limb and said that the markets did not go down because of the voter turnout, the markets haven't turned back as well in full fashion, even though some fashions of some quarters of the market may have liked, but selling getting over, ebbing a little bit. I mean, we saw a large sell number yesterday as well. I would reckon at some point of time
it's too early to tell that things have changed. It is, I think the consensus amongst most technical analysts still remains, it is a sell-on rally. So it is going to be a very tough market to navigate.
So Niraj is continuing with the apna time aayega. He's saying at some point the selling changes. Before we get to everything else, guys, I just wanted to take a second to talk about what happened yesterday in Mumbai. And I know we always talk about markets, economy, making money. At the end of it, it doesn't matter if this is your quality of life. And why am I talking about this dust storm? It's not just about the traffic that perhaps many of us got stuck in. The fact that because of dust storms, a hoarding can fall, 100 people can get trapped under it for hours, and 14 people die just on their way back home in the financial capital is just something I find very disturbing and shocking. So even as we, speak about economy, incomes, at the end of the day, it's about improving your quality of life. So what does it all matter? You could be driving any car, you could be making as much in your portfolio, but if you can just lose your life coming home under a falling hoarding, it's just shocking. So just wanted to take a second to address that, and of course our condolences to everyone who was hurt, injured, and lost a loved one yesterday in the financial capital. Now, having said that, let's move up to the global trade setup of the day. And, that sort of winning streak of the Dow was snapped. Remember, it's their longest winning streak this calendar year since December. So a bit of a breather over there. The Dow ended lower. The Nasdaq was the only sort of winner, mildly in the positive territory. But what is concerning them is a whole host of consumer sentiment data, which is being put out by various agencies, the latest from the New York Federal Reserve, which shows an anticipation of increased inflation. Now, you have to understand what this data really is. It's a consumer sentiment set of data. It's also a data-heavy week for the US markets. You're going to have producer price index, you're going to have consumer price index coming in, and all those gauges are anticipated because if the market has run up, the US market has run up the last 9 trading sessions on the bet that there will be 1 or 2 rate cuts starting September, then you need the data to back that theory. And that is what we're going to be seeing this week. The bonds also remained a bit tepid, I would say, ahead of all of this anticipation, the 10-year Treasury at 4.48%. But one story that caught my eye is GameStop. And I mean, what a story. This is after Roaring Kitty, this one social media activist for GameStop in 2021. After 2021, he made his first comeback, and I don't know if you guys saw that video. It's just a collection of pictures from Wolverine's scenes coming back with his claws. So this guy called Hello Kitty has actually put out that one video, and it just that one video had the stock rallying 110%. I mean, look at the power of social media. So GameStop was an interesting story. Crude not doing much. The Brent at about 83 a barrel, even as all of that data etc. is expected, so no big moves there. I'll just quickly pull up Asia and the implied open for India. So we had the CPI data come in yesterday in India, about 4.8, in line with expectations. No big story over there, but mixed cues overall as far as Asian markets are concerned. Let's look at the implied open just for a second to see how we are set up. And yeah, this is the trend that we've been seeing, isn't it? Mildly up in the green, about 58 points. Whether it stays or not after that then becomes the big question. What's the big move we see sort of mid-morning? And just one more data point we should see in light of what we've been seeing as key factors is fund flows and what the fund flows were like yesterday. What really drove that recovery that we saw in the latter half of the day? Definitely not FIIs. They're continuing their selling spree, nearly 4,500 crores, while DII is about 3,500 crores. So, in terms of FII is coming in, Niraj, you're arguing that the selling spree is over. Maybe not all of it.
Maybe not. I mean, so again, who's to say, frankly, because these two were not the only ones. But
I'm seeing the data every day showing that selling is on.
Yeah, it's clearly on, and for sure. For now, it is on
since April, to be fair. So there's been
exactly. The only thing is the massive large numbers.
They heard Amit Shah yesterday.
Yeah. So the very large numbers of Wednesday and Thursday are behind, because we do know that now the fund names are known. So Marshall Wace, Dev Shah, Siganti, etc. The selling, the remnants of the selling from those two large funds seem to be behind. If the dealing rooms are saying maybe some pieces might be there, because remember, these funds get to lever about 5x. So no one quite knows that while their actual cash exposure or the fund mandate may have been whatever, how much they were levered to. But be that as it may, the belief is that some of this selling, presumably that came in from these funds, is behind. Now, yesterday was a very good recovery day, right? Despite the FI sale day, because 4,000 crores sold, but it is a very good day of recovery, which is a positive. Banks led the way, as Samina, you were saying yesterday. That the problem seems to be that the VIX is still higher, and that's a bugbear. So 2 or 3 messages, including from one of the guests who comes on the channel saying that, this is a suckers rally, people will get sucked into it. But I don't know. Let's see. Towards the end of the week, the belief still is in large institutional dealing rooms that the market will be higher from where they were at the start of the trading week. And then you kind of narrow it down to pockets, right? And if you just look at 2 pockets, one, agrochemical stocks, by virtue of what UPL or a couple of others did yesterday, volume growth numbers coming in, even if pricing not there. So that is one. And just look at the action in healthcare, guys. Liquid names out there. Dr. Lal, UPL, you classify agrochem, Metropolis, Cipla, massive gains in trade yesterday in the liquid names. We know that the non-liquid names also did well, but Aurobindo, Lupin, the healthcare was a pocket that was abuzz, and you might want to believe.
Defensive play, perhaps, or you're seeing something else cooking there?
I mean, just the commentary that is coming in makes people believe that if volume growth has come back, and at some point of time, if pricing does come back, in US, of course, generic pricing is okay, but in the other markets, in CDMO markets, if pricing does come back, at some point of time, the earnings uptick will be so sharp that people will probably not get a chance to pile in. There is something certainly happening in that agrochem and pharma space.
We've got an upgrade on UPL as well this morning, but just to talk about the option play that's happening. So while you said a number of dealing rooms were talking about a higher close for Friday as opposed to an opening on Monday, maximum call OI is seen at levels of 22,500 for June 6th expiry, which really means that most people are betting that that could potentially be where the action really abates. But what is interesting to note is that if we start seeing that uptake beginning now, then option traders will run for cover, which means that the journey further upward could be very, very likely. But let's not forget that because of your VIX, option premiums are very expensive, which makes it actually it's a tough market, like we say, right? So while you might have some grip on what the direction or the range for the market is, let's not forget, if you're somebody who's buying options, you are paying a massive premium. On the flip, if you're selling options, you're eating a lot of premium. But that range becomes a tough one to trade. So keep that in mind. 22,500 is where you've seen maximum open interest, call open interest for June 6th expiry, which really means that the markets start moving up starting now, closer to those levels. These traders will run for option cover, which could then take the markets up to new record highs. And that's really what the street is working with. 22,800 is also seeing some action, and so is 23,000. That's on the option side of things, and the fact that the wicks, like we keep talking about the wicks, right? So while you can't play the wicks, what the wicks being higher implies that premium on these options are higher, and that's largely what you want to keep in mind. Tamannna indicated inflation, and I want to quickly talk about that inflation number, because while the inflation reading came in at 11-month low, 4.83 like she indicated, food inflation continues to be very, very sticky. So I think that is something that the street is going to notice. Will have no impact on monetary policy, because all we really need to do is follow the Fed in terms of rate action. But food inflation is sticky. That comes in at a record high of 8.70 versus 8.52. The fuel price cut is what contributed well to the number, and core inflation barring food continues to see easing. So some economists may argue that the economy is slowing down, and hence input costs have been coming off. And of course, you have been hearing order wins have been slowing down over the last couple of months. Also, a quick mention on food we've talked about, and we've talked about the fact that urban inflation has eased or looks much better in terms of inflation than rural inflation. So rural continues to be a concern, important from the angle of consumption stocks, right? Because there is a price pressure coming in for rural India that will impact the way some of these consumption names are doing. So that's on inflation and on the option side. But going into stocks very quickly, a bunch of news driven counters that we should mention about, Shriram being one of them. I've been discussing this with Niraj and struggling to find out how the street would view Shriram Finance's stake sale to Warburg Pincus. A stake sale was on the cards, came in at a valuation which is probably slightly lower than what the street or brokerages had expected. It's come in at 96 rupees per share versus 140, which was a broad estimate that was put out by Citi. So while the valuation may be lesser, brokerages like Citi believe that this will give Shriram Finance an opportunity to invest back into their core business. So if you're a medium to long-term investor, you'd view this as a positive. Apart from that, Morgan Stanley believes that this is such a small portion of their SOTP valuation that the pricing of the deal may not be as good as they would have expected, hence negative in terms of a reaction today. But again, because the impact of it is so much lesser, the reaction may not be too negative. I don't know if you want to comment on this one, Niraj. I'm thinking...
Well, I think that's probably it.
Yeah, so I guess focus on core business. There have been no upgrades on the stock, so you want to also keep that in mind. The ratings stays the same, but it's a huge cash inflow that comes in at about upward of 4,000 odd crores. 4,630 crores is what they'll get out of it. That is Shriram Finance for you. Apart from that, another two that I want to quickly touch upon is going to be DLF. Numbers were good. You had a few brokerages indicating that those numbers were actually, while the pre-sale numbers don't look great, lots of positives working out for DLF as they go into next year. So revenues are up 46%. EBITDA has also seen a pretty sharp jump of about 90%. Profitability has come in about 60% higher. So all in all, good earnings from DLF quarters. Aggressive buy call coming in the two brokerages that I saw. So impressed, to say the least, even though pre-sale numbers haven't looked good for this one. FY25 will see a good impact of a lot of the luxury projects as well that kick off. Remember, those come with better margins. So if you're doing more luxury, the margins will be there for everyone to see, and that's what you want to see.
I'm just curious on DLF, Samina, because the conversation with a lot of the real estate players has been that more than the top line, bottom line, the pre-sales numbers matter.
Here it really depends on which side of the accounting you're sitting on, right? How much window dressing you're trying to do at this stage.
So in DLF's case, the core numbers look decent, but the pre-sales, as you mentioned, are not as much. So I'm wondering how that's really going to play out, because it's been the reverse.
Seems quite pleased.
It's going to be, it's the reverse for quite a few other players where they've focused only on the pre-sales.
Yeah, I think, but the note also seemed to suggest that Q4 was a miss.
But FY25 is going to be so much
starting
better.
Q1
the pipeline
because of
looks really good.
Also that Privana West.
Yeah, that's what 56 billion. Yeah,
so
in the
that
first
might
quarter.
just do the trick for DL.
And they've also said that the margins will expand, so that is expected to look good. I mean, luxury really is a sweet spot, and I think this is why why it makes sense, right? When you read about all the likes of the Prestige, the Shobha, the Lodhas of the world building all these beautiful, luxurious properties in suburbs of Mumbai, you know why this is getting done.
But it's a difficult one to call today. I mean, there is a miss on the pre-sales, but there is
so
a good
if I have
guidance
to quote
given
Morgan Stanley, and I think they are sitting on the fence here.
Okay.
Lower than expected pre-sales, but FY24 outlook strong. So even they are unsure.
All those luxury apartments, I would really have comfort when I see lights on in all of them. And filled to occupancy, which is a bit of a cycle, but nevertheless.
Just one quick one after that is Chalet Hotels. I'm going to bring this one up because the numbers were good. Revenues were up 20%, profit was strong. Key highlights was that average room rates are up 5%, occupancy stands at 76% versus 74%. Lower tax outgo has helped profits. The stock was down 2.5%. I'd be like to see how this one does. I mean, this has been quite a theme. So the likes of Ilios as well really do enjoy playing the tourism, hospitality sector, which has been in the news for all the right reasons in the last few months at least, guys.
So Chalet is interesting. I'm going to talk about Zomato. Just because it was such a dramatic story towards close. It came in about last 15 minutes of close, and if you just pull up the chart with what happened with Zomato, plunged 6%, recovered to about 3.5-4% down finally. The first cut of the numbers seemed disappointing to the street, below expectations as far as the top line was concerned. But the earnings call highlights are interesting to say the least, and you have quite a few notes this morning. You might see a turnaround in the Zomato story, which is why I wanted to start off with it. So now just a bit of those call highlights, and we will get a detailed report on it as well from my colleague Mihika. But Blinket, remember, is the big bet for Zomato, and those numbers show that Blinket has got its strongest positioning in the northern part of the country, but is moving towards more dark stores in the western areas, Mumbai, etc. The business has turned adjusted EBITDA positive. With Zomato, you always see this adjusted EBITDA marker, which is interesting. Aggressive expansion space. They expect the business to maintain EBITDA neutrality and penetrate further in Bengaluru, Mumbai, Hyderabad. The hyper-pure segment is not that great, but they expect improvement in the margins to continue. Just quickly tell you what Nuvama and Citi are saying. So Nuvama has maintained a buy with a 245 rupee target. That's nearly a 25% upside. Remember, for a stock that has already run up massively, you're seeing that in the last 3 months has already run up about 27-28%. Blinket expansion will impact short-term profitability, but that's okay as far as Nuvama is concerned because it helps cement the business as a quick commerce leader. Blinket's AOV is also down 2.8% on seasonality. That's Q on Q. They anticipate aggressive store addition to hurt the margin expansion, but that's okay as far as they're concerned. Morgan Stanley has maintained an overweight on Zomato and 180 rupee price target, so not as aggressive as a Nuvama. But they're saying that the consolidated adjusted revenue and EBITDA beat brokerage estimates. We're going to get a detailed conversation as well from an analyst on this adjusted EBITDA business and how the street looks at it. Just to add one more, Citi has maintained a buy with a new target price of 235. That's a 19% upside, 19.5% upside. So you might see some action on a Zomato. Remember, it is a long-term play as well. And once that investor call went through, once the details were out, you might see a change in mood from what it was during close yesterday. RVNL, just a very quick comment on it. It's got an order worth 239 crores from Southern Railways. That's a stock which has been out of favor the last couple of weeks. But that's an interesting sort of a news update. So you might see some action in RVNL. And UPL was the other one. I mean, we spoke about it in some detail yesterday as well. And Niraj, you mentioned it today. The turnaround story which is being anticipated in UPL is what needs to be watched, whether there's more steam left after the 6.5% run yesterday, where on an otherwise poor day, except for the turnaround or except for the change in mood towards the latter half, UPL did fairly well. So now, what are the brokerages saying? Jefferies has a buy, target price of 610, reduced slightly from their earlier target price of 635, but still a 22% upside. The industry headwinds continue in FY25, that is clear. But it seems to be on a better footing once recovery sets in. So that's the game. That how is it relatively placed? Citi, meanwhile, has also rated a buy with an increased target price of 675 versus 650 earlier. That's a 25% upside. The real key factor, and that one line I would pull out, is that management has indicated 80% of impact of channel rebates and high-cost inventory consumption is behind. So like the conversation we were having yesterday, that is the worst over, maybe not completely in FY25, but all things considered, will UPL be better paced to be at the front of this recovery in the entire agri-chemical space? So UPL continues to be one to watch today as well. Yeah.
Yep, watch out for that as well. The bond, the 2030 bond of UPL, if we had looked at it last night, had the biggest gain since December 2022. I mean, that's a stunning statistic. And for a cheap stock to see that kind of a reaction, maybe it's a post-reaction to the move that we already saw yesterday. But I wonder if that also brings about an uptick in UPL today.
I'm glad you mentioned cheap. The stock has done nothing.
Yeah.
Not just over the last 1 year or the last 3 years. It's been a non-performer. If it wasn't for that 8% up move, its 1 year return would be 30% down.
Yeah.
30% down.
The only thing is in the con call they mentioned that their 4 to 8% guidance seems to be based or is based on no pricing recovery at all. If there is a pricing recovery, which they don't believe will happen.
Price action.
Yeah, but if there is no pricing recovery, or if there is pricing recovery, that will probably add to the 4 to 8% guidance as well.
So I think if you're looking for value, where stocks are not very expensive in this market, which a lot of people are talking about, agrochem is the only space you want to hide under. It's like probably a rock.
Yeah, possibly, yeah. Just very quickly, 2-3 stocks. We're way over time, guys, but just very quickly, 3 stocks from mine. JSPL. Good numbers. You could argue that with this margin beat, the stock could well react positively. Brokerages seem to believe that JSPL's numbers, so look at that, revenue at 13,487 crores, the estimates were 11,896, margins up 214 basis points at 18.12%, the Bloomberg estimate was 10.2%, and PAT up 100x. Or 100%, sorry, not 100x, at 933. The estimates, though, were 1133. So on the PAT front, missed a little bit. Brokerages say it's an expensive stock. Valuations are not cheap. In fact, there's a 30% downside as per Jefferies or Morgan Stanley, one of the two. Watch out for Jindal Steel. Good numbers may react positively. Valuations may cap the upside. Aarti Pharma Labs, revenues weren't the best, just 4.26% higher, but margin uptick, 23.23 versus 16.49, as a result of which PAT up 52% at 65 crores versus 42 crores. It's the best ever quarterly result for the company because they scaled up due to utilizing capex, which they had done in FY23-24 for xanthine. And that's why Aarti Pharma Labs could have a field day today. And Shriram Pistons is the third one on my radar. Record high numbers, revenues 856 versus 701 crores, operating margins at 21 versus 19, PAT at 116 versus 91. Stock trades still at about 19 times trailing 12 months EPS. Watch out for this one.
Just 2 more that I want to build on brokerage views. While yesterday the day belonged to ABB from the get-go in trade, this morning there are 2 more upgrades coming in on ABB. So the rally will be interesting to see how that plays out. One by Nuvama and the other one by UBS. So both of them coming out with very aggressive buy calls on it. Another one that's definitely worth a mention and which has been a theme on the street from all the way from March up until recently has been defense. And HAL has been leading the pack in that sense. This morning, UBS has come out with a very aggressive price increase on HAL, a 44% upside from where we stand right now. Target price of 5,300 versus the initial 3,900 that UBS had set out on HAL for. So they believe the good run is expected to continue. The stock was up 1.5% yesterday. Wouldn't surprise me if we get a gap up on HAL and the gains continue. And that sentiment may spread across to the likes of a BDL, a Cochin Shipyard, which may also see some buying, even though I think there is some order win news on Cochin Shipyard too. So that's what I have. ABB and HAL additionally today in focus.
Yeah, and that's the long and short. There's Varun Beverages and lots more. But we'll talk about all those stocks a bit later on. It's really time for Editor's Cut. We'll do a truncated version of the Editor's Cut today, Alex. But Suffice to say, focus on elections again?
Absolutely. In fact, it is the word on the street. It is what the street is focused on. And in fact, whether or not you read too much into the voter turnout data that is coming out, of course, the fourth phase concluded yesterday. 96 seats saw polling done. And, well, Tamannna is going to break those numbers down for you. Whether you read too much into the volatility is the question that the markets are perhaps asking. But let's start with the voter turnout number, because everyone's focused on that this morning. Yeah. And once again, it's lower.
So, it's interesting. The Election Commission has just made this entire, activity of tracking the voter turnout much more challenging and interesting, because they put out a provisional figure at 8 p.m.,
yes,
which was about 62%, 63%. The final figure they've put out close to midnight yesterday is about 67%.
Wow, so there's a substantial increase.
So, and this has happened in phase 1, phase 2, phase 3. So, let me just put it simply. If the market was worried about lower voter turnout in phase 1, phase 2, phase 3, go back and see what the Election Commission is saying about these first 3 phases, and their final data versus the provisional data is a good 3 to 4% higher. Now, how that happens after the cut comes at 8 p.m., I'm not sure what the methodology is, but suffice to say that this entire conversation in the market among political pundits that there is a lower voter turnout substantially compared to 2019 does lose some steam when you look at the final figures
Sure.
that the Election Commission is putting out. Another sort of caveat to comparing 2019 phases to 2024 phases is that it's not the exact same number of seats. So maybe broadly, but like, for example, phase 4 in 2019 had 74 seats going to the polls. Phase 4 in 2024 has 96 seats going to the polls. So what you need to do is you need to compare it state-wise, which is what we've done for you on the screen. This is as per, remember, provisional data of 8 p.m. yesterday. So you're seeing a substantial change if you look at the provisional data. The biggest drop in voter turnouts in Bihar, you're seeing in Jharkhand,
as
in
well
Maharashtra,
Andhra Pradesh as well.
Yeah, which this is the phase 4 voter turnout. So you're seeing changes there. Jharkhand is positive. So now, why is voter turnout a big deal? Let's talk about that. Why, at the end of the day, does anyone care about voter turnout? Sorry, I preempted that. Voter turnout is seen as a big deal because past data is showing you that incumbents come back to power more comfortably on a higher voter turnout rather than a lower voter turnout.
This is based on how much data?
This is based right from 1957.
Wow, okay.
Okay, so if I look at data right from 1957, I'm not counting 1952 when you had your first general election because you had no base.
Yes.
Incumbents come back to power more easily on a higher voter turnout. Does this mean that this is a scientific fact? No, because with elections it really isn't. You ask any psephologist and they wouldn't claim that this is a scientific fact.
Yeah.
But this is contrary to broad perception that if fewer people come out to vote, it's because they
they anticipate an easy victory for the incumbent.
Yeah. So a higher voter turnout is always good for the incumbent. Frankly, it's good for the nation.
Yes.
And people should come out and vote. This is for all of you in Mumbai who have a long, don't think 20th is a long weekend. Please go out and vote. I'm just slipping that in. So what is the voter turnout telling us today when I look at the final data?
Yeah.
It's not as low as was anticipated. There is a decent sort of a turnout, especially Jammu and Kashmir is impressive. It's almost double of what it was in 2019. Some states is lower. West Bengal is leading the pack with
close to 80%, if I'm not mistaken.
Yes, but lower than the previous election. Now, how do you look at it? Because West Bengal is a stronghold of, say, the TMC, not really of the BJP. So who is it bad for if I take that theory across?
Yeah.
So it's a little more complex than that, is what I would say. And, as Bernstein is saying today, hold your horses, wait till June 4th. It's very difficult to conclusively say anything one way or the other right now.
Absolutely. And the other aspect that is playing out is volatility. We're looking at it. You guys addressed it in your setup for the day. What a wild swing we saw in trade yesterday. But you've written a piece, Niraj, and I would strongly encourage everybody to go out and read that piece when you have the time. It's an opinion piece on the website titled, if I'm not mistaken, why the retail investor should embrace volatility this poll season. What are you saying?
I'll make it very quick. Just two tables really, which lay it out. So if you look at we've just taken the past 3 elections because, I mean, frankly, 2004 was too far back. And there was this whole period of an economic boom globally, so not considering that. But if you look at any of those 3 periods, no matter what happened during that election period, volatility, 5 years out, the gains were very large. So for 2009 to 2014, 55% gains, 2014 to 2019, 56% gains, 2019 to 2024, 88% gains. This is as per calculations 3 days ago. So no matter what happens during the election period, if you lose out on buying, then you miss out on those returns. And frankly, people may say past may not be an exact indicator. So here's some data about what the future could hold in store. We've assumed a Nifty EPS of 1142 for FY25, which is as per the Motilal Oswal estimate, and then a modest 12% EPS growth for 26, 27, 28, 29, and assigned a 2021 PE multiple, which is what India has historically traded at. Assuming that there is Amrit Kal and growth, we might trade at those levels. The Nifty might well be at 37,736 by FY29. We are currently at 22,000. You want to pay heed to the election volatility currently, or just stay invested and make the returns as they come over the next 5 years? The choice is yours.
Only on the back of an argument for earnings growth of 12%, which
is very
someone
modest,
would argue, a lot of people would argue is modest. Now, it is a fascinating conversation. Tamannna, Niraj, I will encourage all our viewers to weigh in on what they think and whether they're going out and buying in the volatility. I thought there was an interesting point that Niraj mentioned, which is at the low point of the volatility in the 2019 elections. Again, I hope I'm remembering correctly. You would have made 99% on the Nifty 50 and not the 80-odd% that you had made otherwise. So that's what you should pay attention to. You know, we're ending the editor's cut right now, but a lot of you in Mumbai witnessed this yesterday, and we're bringing you a live report from the ground. In fact, in Ghatkopar, our NDTV Marathi reporter Juhi Jadhav is joining in to give you a picture of how things stand right now on the ground, because this was completely unexpected and threw the city out of lurch somewhat. So, Juhi, what can you tell us about the latest?
Alex, as you rightly said, the entire situation was unexpected. As you can see right behind me, I am standing at Ghatkopar, where yesterday a billboard, an iron billboard, fell on the petrol pump, which was almost 100 foot. And if you go to see, almost 14 people were killed by this billboard which had fallen on the petrol pump, and more than 80 people are in the hospital who are under medical circumstances. And yesterday, Maharashtra Chief Minister Mr. Eknath Shinde had come over here. He had seen the situation, and he has announced to announced to help the people, the family members of the deceased. But right now, if you go to see, there are many cars which are crashed under this billboard. This is a huge iron billboard which had fallen down yesterday. A major thunderstorm had affected the financial capital, that is Mumbai, the financial capital of India, Mumbai. And if you go to see, many cars, auto rickshaws have been crashed down, and 14 people have lost their lives. And yet there is a chance the rescue operation is going on, and the people are saying that there might be 1 or 2 people who are yet trapped inside. If you go to see, the owner of this billboard has been charged. The billboard was illegal. The permission that usually a billboard has to be given is of 40 or 40 feet, but this billboard was of 100 feet, and that is the reason that it was affected. And also the base of this billboard was not strong. So the other billboards apart from this in entire Mumbai city will go under structural audit, and after the structural audit, if the billboards are not safe, if they are illegal, they will be removed, because in the month of June, July, August, Mumbai will face heavy rainfall, and before that, to stop such condition, to stop such critical accidents henceforth in future, the billboards will be removed. Right now, if you go to see, we can see these live pictures that how the cars are crashed. Many cars have been crashed, and there's a huge loss that has been faced, and the owner of this billboard has been charged. Rescue operation is yet going on from yesterday evening, and it will take more 2 days to clear the entire debris of this billboard. Alex.
Welcome back. This is US. You are watching India Market Open, and we are getting you the election trade for the morning. Well, let's start by taking a look at how things are panning out as far as Indian markets are concerned. We're just about 3 weeks out and away from the outcome of general election for this year, and well, let's see how things are panning out when it comes to positioning, not just for this week, but over the course of the next 3 weeks as well, and what we can in fact expect. We're going to start off by taking a look at the Nifty. We saw a little bit of recovery after more weakness in yesterday's day of trade, and not too much change in open interest there. But when it comes to the Bank Nifty, again, that's where we're seeing a little bit more unwinding, with the OI in futures declining by around 3.7%, even as we see a 0.7% up move as far as the Bank Nifty is concerned. And that's where, from what we understand, is that a lot of strength was on account of some of your private sector names. Moving on, let's talk about your overall options market. Now, options activity was all over the place because of very wild swings in the Nifty yesterday. But let's take a look at the overall options open interest. And, we do have substantial amount of writing around 22,300, 22,500 calls on the lower end, more writing around 21,700, 21,900 puts as well. The range is varied because you do have a lot more going on across various strikes, and this is also perhaps on expected lines because we have also seen a sharp rise in implied volatilities indicated by an expansion in option premiums, and that's also the reason why the VIX, of course, has moved above the mark of 20, also on expected lines because of that big event coming up down 3 weeks. And as far as your stocks go, let's pull that up and take a look. A lot of that will be a reaction to earnings or perhaps in anticipation of earnings coming through. So we do have longs in Cipla, Astral and Siemens, and Piramal Enterprises and Dixon Technologies showing weakness, looking at shorts among stocks which saw unwinding, short covering for JK Cement, Gujarat Gas, Jindal Steel and ABB. But the real question is, what do you do with all of this data, and how are you placing your bets? Well, let's get in Amit Goel of Amit Ventures, who's joining us on the show. Amit, good morning. Thank you so much for joining in. Let's start off with your view on the benchmarks. How are you placing your option bets here?
Hi, good morning, Agam, and very good morning to all your viewers. I've been maintaining a stance of buy on dip and a structural uptrend in the market, and I'm looking always for opportunities to buy on any substantial dip at a support level. Nifty has, on predictable lines, taken support at around 21,900, 800 levels. And I would feel that, we are now in the up move leg of this recent range-bound sessions that we are witnessing. I don't see a clear-cut trend emerging till we, get over this major event. That is June 4th. So, but at lower levels, it's always going to be a buy on dip opportunity. And structurally, I would feel that any trader who wants to play on this could possibly look at selling the 21,800 puts, and keeping a tight stop loss on that. Investors who are long-term investors shouldn't really be looking at daily volatility and continue doing their SIPs and everything, because as I was seeing the program earlier, the earlier segment very clearly showed that, whether there are elections or not, when there is a structural bull run in the market, you tend to make money when you hold on to your investments for the long time. So long term, yes, bullish. Short term, structurally, we are looking at a support zone. And so, yeah, I would be a little bullish on the markets for the time being.
Strategy on the Bank Nifty, Amit, at the moment?
Yeah, once. Bank Nifty also has been, mimicking the major index, which is Nifty, and it has taken support at 47,000 levels. The distribution of OI, if you look at that for this week and for the next week, I'm focusing on the next week's expiry. It is fairly distributed across major round strikes of 47,000, 47,500, and so on. But if you look at the overall structure in terms of the candlestick pattern that it has formed at these higher level support areas, I am more keen on setting up a bullish short strangle, wherein we will look to sell the 47,000 puts for the 15th May expiry, one lot. And we will also look to sell the 49,500 calls for the 15th May expiry. We are looking to net about 3,500 rupees as max credit, which should be our eventual profit target, and a rupee stop loss of about 2,500. The margin in this trade is likely to be about 90,000, and conservative traders who are concerned about the intraday volatility on account of this election event could look to buy hedges to convert this short strangle into an iron condor and have a limited risk setup as well.
Right. Well, viewers must remember that this particular strangle is not at the money. It's slightly higher than at the money, and which means that you tend to get much more in terms of your maximum profit that you can get. And of course, on the lower end, of course, Amit has mentioned the stop, which actually makes the risk-reward ratio very, very favorable in this case. But Amit, moving on, you also have a stance on Tata Motors. What kind of option structure are you deploying here?
Yeah, Tata Motors, the auto sector has been performing well over the last few trading sessions. Tata Motors also was, trading in a fairly strong uptrend with fair bit of range from March. We are now at the lower end of that March range. Results were fairly encouraging, but the commentary from the management was not all that enthusiastic, if I may use the word. Possibly that is why we have seen a knee-jerk reaction in the market. I would like to play a contra bet on Tata Motors. I'm structurally bullish on this counter, and from an options setup, what I would like to do is I would like to set up a call ratio front spread. But this I don't want to set up right away at the opening. We will probably wait for an hour or so to see if Tata Motors is opening flat today, or it is trying to move up a little. If we see some bit of bullishness creeping into this counter during the day, then we could look at buying one lot of 950 calls of May expiry and sell two lots of 1,000 calls of May expiry again. 1,000 would be the level which also fills the gap which has been created yesterday, and also from an option chain perspective, that seems to be the strike where we have maximum call open interest. So crossing 1,000 for Tata Motors in the short term looks a little unlikely. So if Tata Motors gaps down again today, this trade would get invalidated. So on a flat to slightly bullish opening, this trade gets triggered. The maximum profit that I would like to target on this trade is about 6,000, and the rupee stop loss will be maintained at 3,000. Remember, Tata Motors is a higher notional value and a higher ID adjusted notional value stock. So you need to be a little careful with your risk perspective.
Absolutely. So there you have it, a slightly positive bias when it comes to Tata Motors coming in from Amit. Amit, out of time on this segment, so I'm going to take a moment to thank you for joining us and taking us through your views on the markets as well as giving us a handful of trading ideas. Keep an eye on these counters. And with that, it's back to you, Tamannna.
All right, thank you for that, Agam and Amit. We're talking about Zomato now. Karan Taurani, Senior VP at Elara Capital, is joining us for more on that. Karan, good morning. I was going through your note where you see an upside of 44% on a Zomato. And, I'm wondering whether what you heard in the conference call yesterday has sort of made you a bit bullish, because the first reaction that the market had to the Zomato numbers was quite negative.
Hi, Tamannna. Good morning. So I think the first reaction, was more in terms of the profitability. The consensus estimate on EBITDA was about 3.4%. Our expectation was 2% for the consolidated company. It came in at about 2.2%. So I think that was the reaction. The second negative reaction was also on the ESOP charges. They created a pool of ESOP for 2% of equity, which will be distributed over a period of 2 years. Now, the point to look at is, I think the blinket commentary is very aggressive. Digital businesses are about, takes it all. And if you look at Blinkit, they already have a commanding position. Somewhere they are a market leader. And I think as per our assessment, their market share in quick commerce is somewhere close to about 35 to 40%. Now, if they go for such kind of expansion plan over the next 1 year, and if they're able to, penetrate deeper into markets where they're not present, where the competitor has got a bigger presence, I think they can potentially move up to 50% market share. And the kind of clout that they will have because of this dominance over the medium to long term is massive. Because I think, they can garner a big chunk of ad revenue, which will better profitability. They can command more premium take rates, as compared to peers. So the point I'm trying to make is it's a very good strategy, and I think they are the only ones who can afford to do this because other peers are making losses in the quick commerce segment. Blinkit is the only one, which is on the break-even path right now. So let's say that even if they're not able to, make profits, but if they remain at similar levels as far as break-even point is concerned, and if they expand this aggressively without increasing or without kind of incurring, hefty losses, then I think it's a potential win-win for the medium to long term.
I just want to understand, Karan, in terms of valuations, where is the upside, and then put this into context of what happens when a Swiggy also lists later this year. We're talking about a moat. This is the only listed player in this space. Do you still see that much of an upside, considering valuations and its prime competitor also getting listed?
Yeah, I think in terms of valuations, the food business stand to be at a premium. I think, given the ESOP charges, that they have, kind of spoken about that, the ESOP charges will continue for the next 5 years. We have cut our EBITDA estimates for the food business, and the valuations for the food business, that way stand to be lower by about 10% in terms of what we were estimating. So from a food business standpoint, the valuations are at a premium, and there's not much to play over there. But the bigger delta here is Blinkit, right? So given the kind of guidance that they have given, if they are even, trying to break even over the next 4 quarters and remaining at similar levels as far as EBITDA is concerned, and maybe in FY26, FY27, we've assumed like a very small margin of 1% EBITDA as a percentage of GOV. And if they're able to get these kind of numbers, I think Blinkit valuations move up sharply. So, from a company standpoint, Blinkit valuations today is at about 42% in terms of total valuations as per our assessment. And, before this announcement came, we were valuing Blinkit at about 25-27% of the total company valuation. So I think Blinkit is a bigger delta to play. Blinkit is a bigger monitorable here. And, of course, as I told you, they stand to be far superior in execution versus any other competitor, be it Instamart, be it Zepto, be it Big Basket. So I think food business, yes, there's not much to play over there. But if Blinkit execution continues to surprise, or rather, gives you an inline performance rather, so I think you will continue to see upside on a stock like that.
Okay, so yeah, Blinkit's revenues have grown 90% plus year on year. So the story is all about Blinkit. Just one last question, Karan. Do you expect a turnaround on the stock today after, some of those details have sunk in post-markets close?
See, it's very tough to say. Basically, there's only a mixed feedback amongst investors, because of lower profitability. So basically, investors were also expecting Blinkit to, drive profitability going ahead, which may not happen in the near term. That's one. Secondly, ESOP charges has led to, lower EBITDA margin for the company as a whole. That's the second thing. So because of these things, there could be certain investors who were, kind of focusing more on profitability than growth. So potentially, I mean, it's very tough to call out, but yes, the stock may open weak, timely basis this feedback. But I think that there will be a very strong pullback, post that. Because from a medium to long-term perspective, there will be investors who will be chasing growth, and somewhere there is visibility, there is confidence that given the kind of track record and execution that we've seen on Blinkit, from Zomato's side, you will see EBITDA margins also coming once they attain market leadership. So I think it's going to be a very strong buy on dips if at all it opens down. But if the investors are happy with the growth, it might even open up.
All right. Thank you for that, Karan. So, Karan, bullish on Zomato, and it's interesting. Profitability is still really not on the table yet. Blinkit growth is enthusing, and the fact that ESOP costs keep going up is something that might be a bit of a pinch for investors. But, that's typical of these kind of companies, right? You need to keep those ESOPs going to keep the talent with you.
But I think what's also interesting, Tamannna, this is one company where unanimously there's been an upgrade. So you had all your big brokerages, including a CLSA, who's come out with a 14% upside. So from Karan to Nuvama to UPS to CLSA, it's not often that you see average takeaways from the call and yet are so convinced about the outlook of a company, right?
Yeah.
And an expensive stock.
Yeah. But Well, let's wait and watch. Let's see if there is a bit of an uptick today.
Should be more than likely, no?
Yeah, the medium term. I mean, there was an uptick from the lows yesterday for sure. Well, market beyond Zomato. Let's get in Rajat Bose and Sunny Agrawal to talk about technicals and fundamentals. We'll have to make this a bit quick because so many stocks to cover. But Rajat, quickly start off. Are you trading the index today, either the Nifty or the Bank Nifty? Good morning.
Yeah, initially I'm expecting it to move up in the sense that it is at 22,100. The major resistance that it is going to face immediately would be 22,220 to about 22,260. This is a level we need to watch out. If it were to come down, then one should book profits. Otherwise, one can expect it to scale up to something like 22,335. That is the 20-day moving average. Similarly, in Bank Nifty is in a better state. Bank Nifty can move up, but then 48,200 to about 48,400 would be a major resistance zone for Bank Nifty. So you need to be a bit cautious. You need to play on the long side, yes, but you should be nimble-footed and book your profits and run. That's the strategy.
Rajat, if this is the stance that you have in mind, what are the ideas? And would I be wrong in assuming that your ideas would be buy ideas today?
Yeah, my ideas are buy ideas today,
okay.
Definitely. Because when I say buy ideas, I don't give intraday calls, I give short-term calls. And I have chosen 3 stocks. Whale looks pretty good. In fact, you put a stop loss below 272 and your targets would be 290, 294 and 301. My positive view on Whale is dependent on the morning doji star and the kind of bounce back that it has shown. So chances are a short-term rise is possible. Second stock is Grasim. Grasim looks really strong. I would put a stop loss at 23.44 and it can still move up from here, 24.25, 24.43 and 24.80. These are the targets for short term. And finally, Jubilant Food. Jubilant Food I have chosen because it has shown 2 bottoms earlier, 421 and 429. And after that, there was an intervening top of 468. That has been taken care of. Even in the recent past, it came down and then bounced back. So there is a possibility of further upswing. Put a stop loss below 462. Targets will be 479, 483 and 491.
Okay. Well, we'll watch out for those. Sunny Agrawal joins in with his thoughts as well. Sunny, we talk about some of the key stocks that are in news today, but just want to quickly talk about one of the biggest movers in trade yesterday with you, and that is Tata Motors. Big drop yesterday. A lot of people invested there, long there. What is your fundamental call? Is it time to sit on the sidelines or go out and use this weakness to add on to positions?
Yeah, good morning, everyone. Good morning, Niraj. So I think after posting a decent set of number, I think the weak commentary is something which led to the drop in the stock price yesterday. So first quarter of FY25 is likely to be a kind of weaker quarter as far as Tata Motors is concerned. And nowadays, with the market being a very fast discounting machine, I think people even don't want to wait for a quarter. First quarter is going to be weak, and hence let us square off our long position. But again, I would be a buyer on deep if somebody has got a medium to long term view, maybe close to around 900 or 950 band with a price target of 1100 with an investment horizon of 12 to 18 months.
Okay, stay on, gentlemen. We need to slip into a quick break. Haven't spoken about ABB. There is a bunch of brokerage notes, a lot of result reactions. All of that after this short break. Stay tuned.
back. You're watching India Market Open. We're gearing up for a morning when it seems like it could be a positive start for the street. Remember, it's been volatile without any guesses wondering why. And of course, your VIX also remains elevated. May see some easing on the VIX in today's day of trade as well. Raja, two stocks that I want to pick up on this morning. Of course, I'll get a fundamental view from Sunny as well on it. Is HAL. You've had a very aggressive price hike target from UBS, about 35% of current levels. How does it look on the charts? It was a rare outperform across a defense pack yesterday. And I also wanted to comment on ABB, 8% up move yesterday, but the inflow of brokerages turning very optimistic on the counter doesn't seem to be stopping this morning either. So ABB, HAL, if you missed those two yesterday, would you buy in opening?
You are talking about Hindustan Aeronautics,
correct,
right?
Correct. I mean, the brokerages have buy calls of 5,200 on it. That's fundamental, of course.
I'm quite wary of such high targets as of now, because if you look at the weekly chart or the 5-year chart, then you will find that this stock has moved up from, say, levels of 1,800 to about 4,000 in a very short span, maybe 6 months or so. And this is getting into a resistance zone around 4,000, which it needs to take out very decisively. As of now, if you ask me from my Gann angle studies and other technical parameters, I think if I were an investor in this, I would have at least booked part profits, and any signal, any negative signal by falling 3,600, I would have got out of it. And regarding ABB, a similar situation is prevailing out there. So ABB, the gap up open is fine, but look at it, that it has shot up. All the positives that you are talking of, even though there had been a huge buying yesterday, but in my view, it looks as if that it is already discounted, because from 4,800 to 7,000, almost 8,000, this kind of a run, it has already discounted this. So another upsurge like yesterday's, I would suggest book profits. I'm actually not very positive on the market in the near term. So maybe today it would be good, but so I would suggest wherever you see this kind of rise has happened already, start booking profits.
Yeah, so take some profit off the table. That's just very good advice coming in, especially when you've got such a big event and the markets are fairly volatile. HAL trading largely flat this morning, but it could be an opportunity if you are a short-term trader. 396 for an HL pre-open trade. ABB as well trading flat with a slight positive bias. I think interesting for me would be Zomato and Tata Motors. Tata Motors, if it sees some recovery in Zomato, if also it does 2% higher on Zomato this morning after everyone raving about, and Tata Motors also as expected, seeing a little bit of consolidation after yesterday's big fall. I don't know if Harsh is ready, but we've got Harsh. Okay, we'll come back to Harsh in a minute. But Sunny, I believe you've already talked to Niraj about Tata Motors. Very quickly, if you get a flat start on Zomato, for a short to medium term investor, I'm calling them an investor because it's a fundamental view, would you recommend Zomato being bought?
Yes, I think the kind of growth trajectory which we are seeing in both the food as well as grocery business, I think Zomato is one of the top pick as far as the fintech businesses is concerned, and should be part of the long-term core portfolio. And as we see, there are many multiple opportunities for the company to report an earning growth. So basically, penetration into new city, increasing increase in average order value, increase in frequency of order. The way the blinket is expanding, the number of stores are likely to get double in next year, that is in FY25. Despite of that, what we have heard from the management commentary is that the cost is not going to increase significantly. So even the EBITDA break even is not very far away in that business. So I think overall a very positive outlook given by the management, and to that extent, I believe it should be the part of your core portfolio.
Let's quickly look at what's happening to Shriram Finance. Shriram Finance also an interesting pick this morning on the news flow that's coming in. That's talk about 4.5% up already. They've exited their housing finance business. The entire 85% stake goes to Warburg Pincus. They get about 4,630 crores on it. Rajat, do you like Shriram Finance? Do you see an interesting sort of uptick on it? Of course, there's an immediate benefit, and right now what you're seeing may be sentimental, perhaps this morning, but worth coming into this?
The Shriram Finance, I think it needs to take out certain levels for it to become bullish again. That is the range between 2420 and 2450. If it manages to get past that, when high volume activity and a lot of buying, delivery-based buying, then you can think of that it can again retest 2600. But if you ask me, I will say that it is just a pullback rally that can happen, and between 2420 and 2450, you will see fresh selling coming in again.
Okay, well, for now, 4.27%. Sunny, actually come in on Shriram Finance just before we get to the top brokerage call, because while they have done this housing finance transaction, one, it was widely anticipated, and it's happening at a valuation better than Canfin Homes, but happening at a valuation lower than some brokerages are estimating. I don't know what your estimates were.
Yeah, I think the valuations are obviously better than Canfin Home Finance and lower than other. But again, what I feel is that overall contribution from this business was very minuscule for the Shriram Finance, and so divestment of this will at least add a growth kitty for the other lending businesses, and we can continue to remain bullish on Shriram Finance. Valuation is something maybe slightly below expectation, but again, if I look the way its contribution is to the overall piece of business is very small, and the growth capital which the Shriram Finance will garner from this will be helpful in growing the other piece of lending businesses.
Okay. Well, so that's the technical and the fundamental view on Shriram Finance. We'll give the stock the chance to settle down. But I tell you what might be interesting to see after it settles down is what forms the part of the top brokerage calls for the day. Harsh Johnson with some of those. Harsh, is it one or two?
It's two, Niraj. Let me first start off with UBS. You have a note coming in by UBS on HAL. They've given it a target price of 5,200 rupees a share, a 32% upside from here, and they've hiked their target price by 44%. So essentially from the 3,600 mark, they've taken it up to 5,200. What they're suggesting in substance is that the government push should in fact improve HAL's execution as well as profitability. They believe that the street's current concern with regard to production ramp up looks misplaced to them, and that's the thesis on which they've spelled this out. They're expecting order wins in fact to be at a higher end of the band at around 5.3 trillion rupees over FY24 to 28, and they are expecting order book to quadruple as a result of this, which is FY28 expected, and therefore they are expecting both the execution ramp up as well as the order book ramp up to aid numbers going forward. They've of course upgraded the earnings and rolled forward the earnings estimates. That's probably aided that target price number, but they've increased the target multiple as well. From 32 times, they've upped the target multiple to 40 times. It's 25% more expensive in terms of target multiple to BEL, but they believe that valuations are justified, and HAL has a far stronger book, and therefore they've done that. But it's a very interesting note. I'll quickly move on to Thermax. A negative note coming in from Citi. They maintain their sell rating, but they've upped their target price from 2,450 odd. They've upped it to 2,986, and that's still a 35% downside from here. So despite the target price increase, and that's purely based on rolling over of estimates to FY26, largely it's still a sell. What they believe is order inflows were below expectations for Q4. The large order pipeline is yet to fully fructify. Valuations at 73 times FY25 look extremely expensive to them, and they believe that order intensity is muted inflows, and the increased capex intensity will keep a lid with regard to where free cash flows are concerned. They've rolled forward their estimates to FY26. I did mention that. And they've increased their target multiple a wee bit from 36 to 40. But nonetheless, the downside risk is still large for them. 35% downside is what they're clocking in on Thermax.
So Thermax in focus, of course, HAL in focus. Rajat, I'm wondering if you have a take on Thermax?
Yeah, Thermax in the recent past has been range bound between say 4,400 and 5,000. And once it takes out 5,000 or it falls below 4,400, there will be a directional move. But unless it falls below 4,200, it won't be weak. And unless it takes out, say, 4,800, there would not be much of a bullishness. So here what you play is buy weakness, sell strength. That is a typical range-bound trading strategy.
Right, that's the call coming in on Thermax. In fact, it was the sell call that came in this morning from a brokerage, in fact, on Thermax. We've covered Tata Motors, Zomato, HL. Those are a few stocks that are on our radar this morning on back of news. Stocks like RVNL as well will catch some attention in early trade on back of that order win, and so will Cochin Shipyard from what I see it. Let's look at a few stocks that are not doing too badly. Chalet is up 2.5% as well. A pack of earnings. Varun Beverages is up about 1.5%. Very quickly, Sunny, you want to comment on what you made of Varun Beverages?
Yeah, again, a very strong set of numbers from the Varun Beverages, and at the same time, we have to keep in mind that June quarter is the quarter which is one of the best quarter for Varun Beverages, and hence first quarter number will be again very good number. And in terms of growth, I think there are few triggers which will continue to drive the earning growth for Varun Beverages. One is its Africa business that will drive growth in FY25. In addition to that, their recent foray into the snacks business that is driving the earning growth. And on the raw material side, we have seen the PET prices, and at the same time with the low sugar product, even the gross margin will continue to remain stable. So I think we continue to remain bullish on Varun Beverages with a price target of 1,700 rupees from a medium to long term.
Okay. Well, as 11 minutes settle, and I'm just trying to think what else could be the best performing stocks in the session today. You would certainly have not have too many losers. Zomato isn't quite perking up, so that's to be kept in mind, and some of the pharma names have come off, but not too many gainers either. Cochin Shipyard maybe marginally, Chalet Hotels maybe marginally, and Shriram Finance just about 1.5%, so bear that in mind. Hindalco is in focus. The company said Novelis has filed with the SEC for the IPO, 644 and counting. It's made a bounce back of sorts, Rajat. Does Hindalco fit the list of trades or not quite?
No, you can trade Hindalco because for the last 4 trading sessions, it has been range bound, and now once it get past say 644, that is that level, once taken out, it will be quite good. In fact, on the upside, you can expect levels around, say, 650, 650, 651. Once crossed, it would then make a beeline to scale up to something like 675 kind of things. But till such time, 650 is taken out, there could be some selling pressure around that level.
All right, Sunny, couple of quick, let's do a rapid fire before the markets open. Only 2-3 minutes left. Cochin Shipyard, RVNL, APL, Apollo.
Yeah, so I think I'm bullish on all the 3 names. So Cochin, RVNL and APL, Apollo. So all 3 businesses have got a different growth trigger, and I would like to add all the 3 of them in my mid-cap portfolio.
Rajat, again, rapid fire is the precondition because we just have a couple of minutes left. RVNL, APL, Apollo and Cochin.
I'll take 2 of them, Cochin Shipyard and RVNL. Cochin Shipyard needs to take out 1255. If it gets past 1255, then only it becomes a buy for the short term, and then it can move up to something like 1330, or prior to that, resistance will come around 1300. And regarding, you said RVNL. RVNL, I'm slightly worried that whether it will be able to take out 273 or not. But still, you will have something like a 13 points kind of rise. If you want to play that, put a stop loss below, I would say 257.
Rajat, very quickly, you want to come in on UPL. It's down from the dungeons, literally.
UPL, you mean?
Yes, UPL.
UBL or UPL?
UPL.
United Breweries.
That's right.
No,
United Phosphorus, UPL.
Oh, God. Well, UPL is definitely, it looks like it is going to test its 200-day exponential moving average, which is around, say, 550. If it manages to get past, then you expect further rise. Otherwise, around 200-day moving average being tested for after several months, there will be some selling.
Well, let's see. UPL for now flattish. Let's see if the day goes by and the stock recovers. The commentary in the con call was positive. The 2030 bond has had a bit of a leg up, but maybe the stock has done a bit too much. DAM Capital, remember, says that execution is the key, and they have a sell rating with the target price much lower as well. But here come the first trades this Tuesday morning. Can we build on after we open up? If we open up mildly positively, is the key question to ask. But here are the first trades. Well, about 25 odd points, 33 odd points, nothing to write home about, 0.25%. The bank Nifty too, just about there, about 0.2%. Mid caps and small caps, 0.22% for the mid cap index, and the small cap index is up about 0.5%. So suffice to say that the market breadth would be looking positive. Tamannna may have many stocks more to talk about. Let's get the heat map up on the screen and show you what's moving and what's not. Shriram Finance, 2.5% higher. So despite the fact that the valuation was slightly lower, maybe the market's seeing the fact that money is in the bag and it's happening at a better valuation some of the listed entities. Hindalco, 1.4% higher. HDFC Life, 2 days on a trot now, has actually done well, so watch out for that. And today some of the PSUs are coming back. You know, these PSUs are kind of rotating their hats every single day on the seats of the gainers and the losers, must say. L&T is up about 1%, iShares up about 1%, HCL Tech marginally higher. Those make the top 10. Shriram Finance now up 4%, so really strong show there. What's not doing well? Bajaj Auto, Cipla, couple of losers, but not too much really. It's the story seems to be the positive market breadth, and the index now trending higher, so about 0.3%. With Shriram Finance leading the way, PSUs and commodities seem to be the ones which are piling on the gains this morning. Tamannna.
Cipla more of a bit of pullback after yesterday's great show than anything else. But yeah, definitely a positive mood. And one of the reasons among many could be your voter turnout. Remember, much better than expected, only 1.5%, lesser than 2019. Compared to the first three phases. Let's come to what's happening on the broader markets. Mid-cap and small-cap stocks also in the green. Mid-cap 150, not bad at all, about 0.5% up. We've not seen that in opening trade for a while. Small-cap 250, 1% up. Maybe, you know, the exclusive interview of the Home Minister that you saw on the NDTV network is resonating with investors, where he's saying stocks will shoot up after 4th of June. I mean, we can't say what will happen, but definitely the mood is positive. All right, let's look at the list of stocks that are doing well this morning. Interesting moves. HAL is one that I wanted to pull up. Very, I would say, positive note from UBS with a 5,200 target price. The stock about 2.5% up. But HAL interesting. We have to see what Zomato is doing this morning as well. The seesaw kind of stuff that we saw once its results were out. 4.5%, nearly 5% down. Remember, this is a stock that has been upgraded and has had positive views across the board from brokerages. But something is clearly bothering the market. If I were to guess, it's possibly the high ESOP costs, because this company keeps announcing more and more ESOPs for its top management. That's not something usually that investors like. So their ESOP costs are going to eat into their margins, and that's really one question mark there. So Zomato having another very bad morning, I would say, about 5% down right now. Varun Beverages is the other one. There's a buy call from Nuvama on them with a 1,690 target price and an upside of 14%. Well, that stock doing well, 5% up. Good numbers as well on Varun Beverages. Remember, seasonal heat also helps a stock like that. UPL, let's take a look at UPL. Very smart gains yesterday. Well, that's not what's happening today. You've seen a pullback about 4.5% down on UPL after a 6% gain yesterday. The notes are largely positive, but FY25 is going to continue to be a rough and sticky year. Maybe that's not the kind of patience investors have right now. Shriram Finance has been addressed, but I'll just quickly pull that up and see if that continues the up move, and yeah, not bad at all, 4% up. DLF and Aarti Pharma Labs were just the other two that I wanted to talk about. These are numbers reactions that you will see. DLF completely flat. Good numbers, muted pre-sales, completely flat right now. Nothing great happening on DLF. Aarti Pharma Labs was the other one. Revenues were up, EBITDA was up 46%. Look at that stock, 7.5%, 8% up on Aarti Pharma Labs. Net profit was up also 52%. So that stock's having a good morning. But overall, I would say market breadth fairly positive, Samina. Definitely a huge contrast to what we've seen in the first 2 days of this week.
Indeed, and but no runaway gains as such on any of the big gainers as well. So there was a block deal on GE Shipping. The stock on back of that is actually looking very healthy in trade. It is turning out to be a top gainer, 6.5% on GE Shipping. Earnings came in yesterday. A block deal took place as well, and the stock is doing well on back of it, up 6.5%. Cochin Shipyard, I don't know if Tamannna highlighted that, but they've bagged a pretty big order from a European client, and that's reflecting in terms of the stock performance, 6% on Cochin Shipyard. The stock is up over 100% recently, in fact 127% in the last 6 months and 350% in the last 1 year. Along with Cochin Shipyard, it takes Garden Reach higher as well, so everybody in the same business is doing okay on back of one order win coming from Cochin. Garden Reach is up about 3%. HAL, Tamannna mentioned, is doing well in trade. A very sharp up move. 4,000 was turning out to be a very sort of stiff level of resistance on HAL. But this morning, the picture is different. 4,050 is what we have. Along with that, let's take a look at BEL and BDL. Those counters again move in blocks. And like I said, a sharp up move on the one counter is also meaning that BDL is having a good morning this morning, 2.5% on BDL. So one company from the sector does well, the stocks as a pack do well. Same thing across rails as well. RVNL bagged a big order, the stock is up. The other counters in the railway space also trading with the slightly positive bias this morning. I want to quickly mention capital market players who are again having a good day of trade. Yesterday as well was no different. Nuvama, Angel One, all those counters trading with a very clear positive bias as we see it. Well, apart from that, you've got like I said, Kalpataru Projects, third straight day running post earnings. The stock looks good, slightly higher in early trade, up about, not even slight, actually, it's a 3% uptick that we are seeing on the stock. CDSL, also from the capital market players, is having a good morning. Let's take a look at BSE while we're at it. That one, of course, has been reeling under tremendous pressure. Still not looking great. Marginally high is what we have it. Hindustan Zinc, Cipla are your two big losers. Let's pull up Electro Steel Castings. The stock has not done really well, but the earnings were actually not bad, at least in terms of profitability. Electro Steel reacting positively to that, up 2.5%. The Nifty looking okay, I guess. 22,156 is what we have. Breadth of the market's not bad. In terms of Bank Nifty, if I can quickly pull that up and see what that's getting up to, because that was a key contributor in trade yesterday. Flat this morning on Bank Nifty is what the way we have it. Rajat, you want to come in on very quick? I know you don't do intraday trades, but GE Shipping is looking really good. There was a fairly big block deal and the stock is at the day's high point up 8%, 8.5%. Now the view on GE Shipping?
GE Shipping has moved up, yes, but then I'm not very confident buying into it as of now, because at least let the dust settles down. Then only I can buy.
Rajat, just wanted to get your view on the India VIX, since that's the big indicator as everyone's watching. Still about 1.5% up on a day when markets are largely positive but muted. I wouldn't say in any kind of celebratory mood. What is your reading into this? Do you think that that volatility will continue for this session as well?
Well, I have studied the India VIX yesterday night thoroughly, right from the beginning till current date. Whenever India VIX moves up in this fashion, even if the market goes up, after some time there is a corrective move that can sustain itself for quite some time, and sometimes there is sharp fall. So till such time India VIX stops its upward journey, we are always under a threat. But I would say that we need not worry so much until it crosses something like 28 to 32 zone, because that is the earlier high. If that is taken out, then we have a real problem at hand.
Okay, so India VIX, nothing to be worried about at 21. Worry about it at 28, says Rajat Bose. Very interesting sort of take over there. Sunny, I'm wondering, any top call after the markets have opened?
Yeah, Tamannna, so I would like to go ahead with AB Capital. So yesterday there was a con call post result, and I think it's a very robust outlook which management has presented. The lending book is likely to will double in a span of 3 years. Out of that, first year FY24 was kind of 30% growth we have seen. So we are expecting at least 25% kind of growth on lending portfolio in both housing and SME and other book. At the same time, there are other businesses like asset management businesses continue to do well. They have recovered market share as far as SIP is concerned. So I think overall, if I do a sum of the parts valuation, I think the fair value of the company comes close to 290 to 300 rupees if somebody has got an investment or has not 12 to 18 months. So AB Capital is one of my top picks. And another stock which we like post declaration of the number is MapMy India, CE Info System. So there also we have seen a very pretty robust set of number, and at the same time with the Hyundai deal under its bag, I think FY27-28 is the year where company will easily clock 1,000 crore top line. So I think CE Info System is a second pick if for a medium to long term perspective.
Right, Tata Motors continues to look weak, so it was trying to hold itself and keep itself together. It'd be interesting to see what the Ghana does. Remember, we had the F&O expert who said that if it sees a negative bias, you should cut out any long positions on the trade. Actually, now it's again turned marginally positive, 961 on Tata Motors. But I don't know, fundamentally and technically, I want a quick view on Syrma SGS. Sunny, do you track this one? 18% fall yesterday, but a recovery of 6% this morning. Do you track Syrma at all?
Yeah, so basically the company is under our coverage, and I think the reason for the yesterday's crack was basically muted margin guidance, and that is predominantly led by increase in contribution from high volume, low margin consumer business, and that trend will continue at least for first half FY25. So earlier Street was baking in EBITDA margin expectation of close to 8 to 9% for entire FY25, and now that has been downgraded to 6%, and at the same time working capital is something which will increase for FY25, leading to a higher interest cost. So I think the earlier Street was baking in 60% CAGR growth as far as earning is concerned during FY24 and 25 period. Now that has been downgraded to 40%. So still a very robust set of earning growth over the next 2 years. So post a knee-jerk reaction yesterday, I think if somebody is a long-term investor, one can gradually accumulate Syrma SGS with a price target of close to 500 over the period of next 12 to 18 months.
Thank you, gentlemen, for joining us. But it's sub 22,100. So the market, while may not be falling off a cliff, it doesn't look like it's holding on to yesterday's gain, at least just yet. Even stocks like HAL that were up 4% and at 4,050 almost are back down sub 4,000 at 4,000. So a lot of the counters of the day's high point as we see it. But it's a little bit, okay, 22,100 is pretty much where we're trading at. We'll take a break. We'll come back. We'll talk to Trideep Bhattacharya, CIO, Equities, Edelweiss, AMC, who'll join in to talk to us about what the elections mean for D Street investors and traders. Welcome back. You're watching India Market Open. The markets are struggling to hold on to the gains that we saw yesterday, but 22,100 is where we are at, 16 points on the index, but off the day's high point on many of those broader market names. Well, the big focus and talking point on the street and across every dinner table right now is elections and what that means for you as an investor. Tradeep Bhattacharya, CIO Equities Edelweiss AMC, joins in to help us understand that. Tradeep, there is so much to talk about, right? I mean, I think every conversation, be it a coffee, be it a dinner table, or be it a TV channel, is elections. And that seems to be the sole focus of investors as well. Somewhere along the line, I think the focus has moved away from the India story to the election story. How important and critical do you think the election performance is, or the outcome on 4th of June is on the markets at this stage? Do you think it's much ado about nothing?
First of all, good morning, and thanks for having me on your show. I would say that overall, in the context of investing in the way it should be done, which is over the medium term with an outlook of 3 to 5 years, the election outcome is basically a small flash in the pan. Doesn't really kind of alter too many big things, as long as there is not a regime change. And I'll come to that in a minute. What matters is where the situation is. And the fact of the matter is that if you look at the capacity utilization of India as a factory, India Inc. is closer to about 78%, which means that we are awfully close to a full capacity, and there is a good chance of capex cycle. And likewise, there are multiple data points. If you look at, for example, power sector, there is a shortage which is which is there in the country, which is irrespective of who comes in power. So net, there are certain parts or the high frequency data points are pointing you in one direction, which has got less to do with who is in power than otherwise. But from a near-term standpoint, I would not undermine the outcome as well. I would say that if we get a hung parliament or a regime change, that's the time that we should be worried, or as we get close to that, if we do get close to that. Otherwise, if it is just the size of the majority, which seems to be the debate in most of the channels and most of the places that I look at, then it's, I think, interesting dinner time debate. But from a stock market standpoint, from policy change standpoint, things don't change all that much.
I agree with you. From an investor standpoint, it should not impact you. All it's doing is impacting traders because option premiums are so much more expensive. But let's put this in perspective. You've got a setup where earnings have not been extremely impressive, to say the least. FIs have been selling from April after the change in the Mauritian treaty to now, of course, election volatility. And from what I understand, they'd rather buy at a premium than buy ahead of an event. And that's what has happened historically, not just for our markets, but globally as well. In a situation like that, and where portfolios have also made money, let's not forget the last few years have been phenomenal for an investor. Would you now say the good thing to do is, or the right thing to do is, to take some profits off the table, let your capital go, or pull out the capital, do a little bit of a cash call, consolidate, and re-enter this market post the event? Is that a fair way to do it, or do you feel like staying 100% invested is worth the risk and worth the chance?
I think overall it depends on the kind of gains that individual has made and the circumstances that they're in. So I wouldn't get into a prescriptive debate on that. But what I would certainly say that, I mean, this is certainly a buy on dips market rather than sell on rally market, in my opinion, from a 3 to 5 year perspective. I think whosoever comes in power, the underlying earnings resilience from a medium-term standpoint of Indian corporates is there to kind of watch out for. As a sector, an example, I would point out real estate to you. If you look at India's real estate market today, the housing unsold inventory is basically at 12-year low. Now, while this is happening in India, if you look at other parts of the world, whether it is China or United States, the data points point to a far more grimmer picture with regards to real estate. So, very specific data point with regards to India, but it shows in terms of pockets of earnings resilience, India has certainly been one. Now, one has to put this earnings resilience in context. So when we came out of COVID, we had 2 weak years of growth. We had 2 strong years of growth. FY25 would be a normalized year of growth. So yes, growth would be lower than what we have seen in last year. But that, in the context of where we are headed in terms of earnings growth, would still be about 15 to 17%, which in the context of last 20 years of India would be called as fairly resilient and well distributed across sectors. So net-net, I'm saying that don't undermine the earnings resilience of India Inc. as yet. Second, some pockets within the country are very country-specific, very bottom-up, and that needs to be taken into cognizance. And keeping all this in mind, yes, of course, we've had a phenomenal rally, but occasionally we do see volatility. Use that volatility to increase the position rather than sell on rally and stay in cash. This would be the stance that I would probably think about when I'm talking to investors.
Hi Tradeep, morning. Tamannna here, and I just want to come back to the voter turnout detail, because this is such a bugbear for the market, or possibly in the absence of any other talking point, it's just become interesting to talk about it. And I just want to quickly refer to this Bernstein note, which I found quite with a different take, which says that if you want to compare voter turnouts compared to 2014, not 2019, because 2019 had a pro-incumbency, national security kind of an issue post-Balakot, etc. That was a different election. Their take is compared to 2014, because 2014 was similar in the sense you'd had a government which had finished 10 years in power, and then the voter had to decide whether to continue or not to continue, change or keep. So, I mean, that's the theory they have. Now, my question to you is, looking at the phase 4 numbers, where voter turnout is actually barely 1.5% lower than 2019, the revised election commission figures also show barely 2.5% gap between phases 2019 to 2024. Do you think that this now calms the market? And what the ground reports are from the next few phases will continue to be at least a short-term trigger till the 4th of June.
Yeah, I think you summarized it quite well. But let me give my take from an investor standpoint. And here is what I think about overall. The first thing that we need to understand is translating this turnout share to vote share. I think one needs to keep in mind, and earlier the jitteriness in the markets was that if people don't come out to vote, one party's vote get disproportionately impacted than that of others. That may not necessarily be true. And now that the data has come out that the voter count is not that different, vote share count is not that different, or the turnout share is not that different, overall the outcome is kind of, and that certainly calms the nerves. But I think, just to put things in context, ultimately, if we get the incumbent government with a total share count anywhere between, let's say, 300 to 350, I think that's a number which broadly markets would be fine with. If we get a combined share count north of 350, I think the market will probably cheer. And the closer it gets to 400, the better it is that the incumbent party did better, and hence things would react in a particular way. The problem area really starts if the combined head count of the incumbent government turns out to be less than 300. So the reason I put those numbers out is not that I am an expert on elections, but just in the context of where expectations are and how do we think about it in a very simplistic manner. The closer we get or the lower we get to 300 is where the problem really area starts. Otherwise, it's more of a discussion point. So I agree with you that so far initially the nervousness in the market has calmed to a certain extent because the turnout share is not that different. But I wanted to link it to the share, the vote share, and the overall numbers for your viewers to kind of make their own judgment. Hope that helps.
So then it comes down to the core question, Tradeep. How are you playing the next sort of 2 weeks till the 4th of June? Everyone who's watching this right now wants to know what Tradeep Bhattacharya thinks and what is he going to do till the 4th of June in a volatile market. I mean, and there are two sides to it. One side is that, just buy, don't lose this opportunity because you're going to be sitting on the 4th of June and wondering why you missed the bus, or be careful, stay on the sidelines. Which way are you swinging on that debate?
Yeah. So I think, as I said earlier, that overall, when VIX was down to about 10, broadly about a month or so ago, we raised a bit of cash overall, but it's a small amount, and so we have a bit of dry powder with us. And we are actually taking advantage of the nervousness in the market to actually place our bets in those areas where we think earnings are likely to be resilient. Again, while election is a matter of debate in all the boardrooms and everywhere for the next month, what is a matter of debate ad infinitum is basically where earnings, in those areas where earnings are likely to come versus earnings that are not likely to come or beat the estimates. So, in other words, whenever there is nervousness in the market from here till June 4th or first fortnight of June, we are taking advantage of of this weakness to buy into or increase our exposure to those areas where we think earnings are likely to be resilient over the next year or two.
Very quickly, Tridib, because let's leave our viewers with a takeaway at the end of our conversation. Defense looking good to you? Railways looking good to you? You're already seeing a GE Shipping, Cochin Shipyard, all of those perking up. So for the next couple of weeks, what are the areas that you would sort of be positive on?
5 areas that I would point you to. One is broadly the capex as a theme. I think any weakness, any different one should take advantage of. Power as a theme, the different parts of the supply chain of power, whether it is transmission, distribution, or for that matter, generation, could be an area to look into. Real estate, both direct and indirect plays, would be another area where we would look for weakness to capitalize on it. NBFCs could be the fourth one, where we are interested in particularly areas which are AAA rated, which will do well over a period of time. And finally, defense. Given that, given our Atmanirbhar Bharat theme, which will probably continue over a period of time, I think the company's order book for the next 20 years are full. So a little bit of a flutter doesn't really make too much of a difference. So these would be the 5 areas where any weakness is a good opportunity to buy, because earnings are likely to be resilient over the next couple of years, in my opinion.
Thank you, Tridib. That was superb. Specific, clear top 5, focus points for Tridib ahead of June 4th. Thank you. Always a pleasure to speak with you. Hope to talk to you soon once we have a clearer picture on what's happening. And that will possibly be June 3rd. All right, time for a short break. On the other side, we get specific. We're talking to CCL Products CEO Praveen Jaipuriar to talk about the March quarter earnings. Stay tuned. Welcome back. You're watching India Market Open. Praveen Jaipuri, CEO of CCL Products, is with us now on the show. We're discussing their March quarter, largely in line. Revenues up 39%. High coffee prices contributing to that top line, but margins expectedly have been squeezed down 548 bips at 16.25%. This is reflected in the profits as well, down about 23.5%. Mr. Jaipur, very good morning. Thank you for speaking with us here at NDTV Profit. I'm interested in knowing your outlook on input prices, because this entire quarter has been about coffee prices going up. Do you see that continuing? What is the impact, since we've seen some softness now come in the recent past, and where do you see volume growth going?
The coffee prices have been very volatile for the last, 1.5 years, and particularly so in the last 4-5 months. And we have seen unprecedented prices for green coffee last quarter. We do expect the prices to soften up. There are news that the Brazil crop, which is around the corner, which is likely to be there next month. The news is that the Brazil crop has been good. And we will also wait for news from the Indonesian crop and the Ugandan crop, which are also due for arrivals in the next month or so. And that will determine the coffee prices and the levels that it will go. But my personal feeling is that it will soften and kind of regularize, because these are untenable prices, not seen for years and decades. So our expectation is that, and basis that, the good thing is that we haven't seen any contraction in the demand for coffee. So thankfully, people are still drinking coffee, and there's not any significant change that we have seen in consumption pattern. So having said so, we believe that our growth trajectory will continue, and that's been our guidance. The only difference is that, when the coffee prices are at low, our clients tend to give us far more longer term contracts. So they're pretty happy to, bet for long term. But when the coffee prices are on a boil, they're also a little tentative, and they would not like to kind of, put their bets, and they give us shorter contracts. So that's the only difference. But otherwise, our growth projections remain intact.
So just to understand, like you said, there's no real drop in demand because of high coffee prices. Are you able to pass on those prices? Because we've seen a squeeze on the margins.
No, we are able to pass on. Actually, the squeeze on margin is actually, there are two ways to look at it. What we do is we generally look at it at a top line basis, but that's not the right way for us, because since we pass on the prices, the real parameter is the volume growth. So if you see at a console level and at an annual level, our volume growth is in the range of 14%, and our EBITDA growth is in the range of 12%. That's perfectly in fine, which also indicates that we have been able to pass on prices. The only change that you see is that in these kind of situations, as it happens in any consumption good, that there will be a little bit of a down trading to basic levels. So the consumers tend to downgrade to more basic levels of coffee, and that's where you probably are not earning as much margins as you would earn in a more premium coffee or a specialty coffee. So the proportion of your basic product increases, and therefore it may put a little bit of a pressure on margin. But having said so, the only parameter we look at is that whether our per kilo EBITDA is intact or not, and that has been intact. We have been able to pass through all these price increases to our clients.
So I understand that in terms of volume growth, you're saying not too bad because you're passing on the prices, but that's shy of your guidance, isn't it? Your volume growth was not quite where your guidance was, and I'm just wondering if you want to update that. Among the uncertainty of coffee prices, what is your volume growth guidance looking like for FY25?
So you are absolutely right. There is a little bit of a downward distinct from our growth projection of around 18%. We came down to 14%, but that was largely because in Q2 we had a breakdown, unforeseen breakdown at our NCL plant, and that led to our volumes coming down in that quarter. We had hoped that we will make it up in the subsequent quarters, but because of these high coffee prices, we were not able to do so. So that was the only reasons. Otherwise, we were on track for the other quarters. And therefore, going forward, yes, we are maintaining that kind of guidance. The only thing is that, till last year, we had a very clear view of our 9 months to 12 months contract, and we had very good visibility. So with great confidence, we would used to say that, okay, 18% is something that we can definitely achieve because we had that kind of a visibility. As I mentioned earlier, because of the coffee prices, there is a bit of tentativeness in the market. So therefore, we can't say with that authority that yes, I am poised for that kind of a growth. But as long as the demand for coffee is intact, we are pretty confident that we will be able to continue with that growth momentum.
You talked about how short-term contracts and long-term contracts get impacted by coffee prices. Now that you have high prices, and like you said yourself, you're expecting the new crop from Brazil, Indonesia, etc., to be at lower prices. How is it impacting your average contract tenures from clients? One assumes that they do not want to really commit too much to higher prices for a longer term. Do you see an impact on near-term volume growth thanks to this?
Absolutely. So we don't see an impact on volume growth. The only impact is that, my visibility decreases. Okay. So till last year, I had a visibility for next 9 to 12 months because the contracts were frozen and we had signed those contracts. But in these kind of scenarios, what happens is that the client is also on a wait and watch mode. They're literally, working on fumes, as we call it. And they just want to be very, very, short term as of now, because if at all, because we do, cost plus pricing and we pass on everything, if the coffee prices do fall down, then they tend to lose out. And therefore, they tend to, be much shorter term. Maybe 2 to 3 months is what they would, commit, and they would wait and watch and say that, okay, let's see how the prices pan out. So that's the difference that happens in these kind of volatile market situations.
And what is your outlook for your EBITDA per kg? That has, like you explained, remained a bit stagnant because of high coffee prices. The volumes have been okay. Where do you expect that to go?
Yeah, so that's the guidance we had given, that for a couple of years, our EBITDA per kg will remain intact, and that's been the case. So today it is approximately 105, round about 105 per kilo. And that is what we expect to maintain for the next couple of years. There are some factors, because coffee prices don't affect us, we pass on literally everything to the clients. But having said so, as I was telling you, the proportion of base products could increase. But at the same time, we are also putting a lot of effort in trying to grow small packs where our margins are higher, specialty coffee, the more premium coffee. So there will be certain factors which will be, pulling up, and there's certain factors which will be pulling down. And that's the reason we had maintained that for the next couple of years, our EBITDA per kilo will remain intact. And all the EBITDA growth that will come is due to the volume growth that we are trying to drive.
Let me wrap up by giving you an opportunity, Mr. Jaipuria, to talk to us about what's exciting. Is the big growth area going to come from your Vietnam, area, new capex? What is that one takeaway that investors can look forward to in FY25, apart from coffee prices hopefully softening?
So there are 2-3, takeaways. We had mentioned, sometime earlier that because of our capacity constraint for last few years, we have not been able to aggressively market ourselves in certain geographies where we are not very strong, especially geographies like South America, a part of North America and Far East. And now that we have, increased our capacity, we are actually being very aggressive in these markets, and we are likely to gain a lot of shares in the B2B segment in this market. So that's something very exciting that we are looking forward to. We are also looking forward to developing a lot of specialty coffee. That's a segment which is gaining a lot of traction in the international market. A lot of consumers are now wanting to experiment with specialty coffee. They are upping their, ante in experimenting coffee. So that's another area. We have done a lot of experiments. We have participated in lots of these conferences and fairs and festivals of specialty coffee across the globe. And of course, the branded segment continues to grow at a very good pace. And we are putting in a lot of effort and energy behind that. And not only in India, now that we are also looking at markets like UK, where we acquired brands. So, pretty much a lot of things that are, that we are very excited about going forward.
Okay, thank you so much for speaking with us. Praveen Jaipuri there, the CEO of CCL Products. High coffee prices have been the overhang for the segment. But like he said, it's not stopped anyone from reaching out for their favorite cup of coffee. Maybe they've downtraded to a less premium product. But in terms of demand, no real drop seen yet. That's all the time we have for India Market Open. Thank you for watching. Stay tuned. Next up, we have Talking Point with Mihir Vora of Trust Mutual Fund.